Okay, we brought the chart professor back because we have one more chart to learn before we dissect and start using this on stock trading. We've done line, we've done bar, we've done candlestick.
Right.
All right, sir, and you brought us the point and figure chart, which is made up of these X's and O's. Really confusing to look at, but it tells you so much information. So the X's and O's represent price movement, right?
Right.
Okay, so tell us.
So the X's would be a column of rising prices. And just to visually make it different, in the 1940s, this one person started using O's for down columns. It could all be X's, which is what was traditionally done in the 1880s. This is a very old chart.
Holy cow, this chart's old.
Yeah. And it ignores time, though we have some dates here along the bottom. And
which are the years.
Right. And then you can see that there are different spaces. On all the other charts, they would be evenly spaced. And the chart would move when we rotated the Earth and there was another trading day. This chart only moves when the stock moves a given amount of price. Here we're looking at 50-cent movements in the stock. So if the stock moves 49 cents, we don't make a mark on the chart.
It doesn't get an X.
If it moves 51 cents, then we make an X, or no.
And that's for the lower prices. Once the prices get higher, the increments get larger.
Right.
Because it's all relative.
It's adaptable.
Right.
So if we had a very high price stock, we might be looking at $5 increments or $10 increments.
You said this ignores the noise. How does it do that?
Okay. So let's say this stock here broke out at $52.10. Is 10 cents meaningful on a $50 stock? I don't know. But if it traded $51, okay, and the last trade was $50.
So it's a whole dollar.
Whole dollar, and that's a big movement, and that it eliminates the small jiggles, the noise, and you concentrate on the bigger picture.
The other thing you said is breakouts are clear. So this is like a blow up now of what we were just looking at. Breakouts are clearer. How so?
So here's a breakdown. Here's a low breaking under the previous low. Here's a
because
breakdown.
because it's lower.
It broke that low. Okay, and here's a breakout that followed through above this dollar amount.
What are the numbers all about?
Okay, it's a way of keeping track of the time because we're not concerned about time. The chart is not driven by time. So one would be January, two would be February, March, April, okay. May.
So you get a sense looking at it, you know where we are in the calendar year.
Yeah, so the first entry for January is a 1.
So we talked about how it's adaptable. Now, it also can give long-term price targets. How?
So we measure the distance across. Okay. And then we project it like a compass downward if it breaks to the downside or upward to the upside. So the more it goes sideways, the bigger movement it can have. On our other kinds of charts, except for the candlestick chart, we look at the amplitude. So a pattern that has a lot of height will give us a much bigger target than that has a small amplitude.
This, though, is like this, it seems like this nice little trend up, very different from what we were just looking at, but yet it sort of tells us the same thing?
Right. But I think it's easier to read here, and we eliminate some of those spikes and jiggles that are not important.
Right, because that's the noise you're talking about. Right. Say the cons are, this is not popular. Obviously, it's not popular because it's complicated.
Complicated, hard to keep up. Traditionally, it was done by hand for many, many years, and only recently has been programmed with software.
And again, conceptually hard to understand at first, but I would think if you can master this chart, that would give you a huge edge. Yes,
anything that people are not doing widely, okay, when you follow a few candlestick patterns, okay, gives you an edge for all the 99.9% of the people that don't follow it. And following this kind of chart can also give you an edge. All
right, so learning how to read a point and figure chart is key. Also following Bruce on Real Money, and of course, watch all these videos on YouTube. You'll learn more and you'll trade better.